Good morning, guys. Welcome to this Wednesday, July 23rd. We're looking at the market, which is showing a little bit of strength. We had a couple of trade deals on trade deal frameworks. I'm not sure exactly. They say trade deals, but between Japan and Indonesia. So a couple of trade deals announced. That's good, and I think market is reacting positively to it. In terms of news, we had the mortgage app come out this morning, and not a big deal, pretty much flat in those numbers. Existing home sales coming out at 10, and Atlanta Fed business inflation expectations. Order report at 10:30, and the 20-year auction at 1. Maybe the 20 auction could be interesting, but I don't think any of this news is going to really make a big dent in a directional move. So. We are starting off range bound, and given the overnight, so yesterday I was thinking, okay, we had a little holding day, right? They backed off a little bit. Maybe drag this up a bit, like so. We're still in earnings season today. Also, we get earnings for Google and Tesla, so big news coming out after they close on earnings, and that could potentially make Nasdaq stumble if there is a bad reaction to these earnings. But right now, though, given given the trade deals, looks like market is also in a good mood at least to get the day started. So yesterday, a little holding day. We could have been in stage two at this point. If they extend just a little bit further, we will be back in stage one. So we are right up here against that 63.75 level, and we can certainly take this higher. But I would start off, as I said yesterday, range bound, and assuming we may be in stage two, and we're looking for this failure, this edge to fail. We'll see if that materializes or not. If they take it out, we're right back on the long side again, thinking stage one again on the ES. But at this point, we almost we didn't quite come to balance. We pretty much extended, backed off, had a holding day. We're back up here against the high. So we will see if they extend today. So if that's the case, we're back in stage one. If not, we are range bound. So I'm going to start off range bound, and I'm going to look for early strength and see if they can take out this edge. If they can't, looking for retracement back to the mean. And if they do, stay on the long side. So looking to buy weakness at this point just against the 63.60s and the 63.50s. These two support areas, the first two. And if they back off more than that, I'm going to just be back range bound on this one. And still looking to buy though against the 63.45s, the 35s, down to the 20s here for rotations back up. Maybe include the 10s as well. I mean, that is not a bad edge to lean against that this low volume area right there. But if that low volume area comes out, then that would be pretty much between these areas, the 20s and the 10th, right smack in between. So both of those support areas comes out, we are heading lower, back in that lower range again. But at this point, looks like the appetite is still to the upside. And as we get the earnings, if the earnings comes out good, and the trade deal starts coming out, I think the market keeps going. I don't think it's probably not going to be a lot of summer weakness. I mean, we're getting into that part with August, September, July, August, September, where it's supposed to be pretty weak. But so far, it's stubbornly holding on because we have all this stuff coming up. They have the big, beautiful bill with all the stuff which is being now putting in place. We got the earnings coming out. We have trade deals happening. So we'll see. I mean, it could be a lot of tailwinds pushing us or propelling us higher. All right. But anyway, so that's how we get started on the ES. And then only short really is against that 75s, if that's going to hold. And you kind of had to take that with a grain of salt. So they had to be a little bit cautious in that short, wait for a good setup and a trigger. But if it looks like it's failing, then by all means, I would be on the short side for rotations back down. Now, if you see a probe to the upside, and worth talking about, a probe to the upside, they start taking it higher, then complete failure, and then take out the London low. If that dynamic happens, I would be a little bit more aggressive getting short below the 60s here, see if they have they can retrace that. That's another trade setup to look for. So that's the ES to get started. Looking at the Nasdaq and the bonds. So bond market pretty much maybe just going in range, going back and forth. So this is just a 3-level up, 3-level down kind of a dynamic going on here. And I would just trade it as such. So At this point, I'm going to sell against the 25s, 29 to 30s up to the 114, 1402s. Looking to buy against support 1314s, 1306s down to the 13 evens. So pretty much in the middle of this range. So below 13, 113, lean short. Above the 114.02, lean long. So that's pretty much the dynamic right now. So it's pretty much range bound on the bonds. If that starts moving in a significant way, then we had to kind of worry about start worrying about something. But at this point, not so much. Nasdaq not as strong as the ES going into today. They're a little bit weaker, but we have earnings, Google and Tesla earnings. That's going to be hitting the Nasdaq pretty hard after the close, and that's going to kick off the big seven earnings. Excuse me. So that is the biggest risk I think for Nasdaq is these earnings coming out. They come out with a lackluster performance or forecast, and the market doesn't like what it sees. We can certainly see the Nasdaq leading us lower. That would be tomorrow morning then. Right now, you can see ES is right up here at the highs. Nasdaq is flat out in the middle. So Nasdaq is still in stage two, and chances are going to stay there. So it's the ES has a shot at extending and getting back into stage one. In Nasdaq, not so much. So that's staying right here. Yesterday's trading was an inside day, so we're in stage two. If they stay here, we'll be in stage stage three on the Nasdaq. So that's all about I think the earnings in the Nasdaq. It pops pretty good and then rotates back and forth pretty violently, especially with what's going on right now. So, but as I said earlier, we have a lot of tailwinds going on right now, which putting a little bit of this seasonal weakness on an afterburner. If they can keep that going, trade deals, announcements, news, and stuff, on the positive side, I think they can have a shot at keeping this together. So initially, looking to sell strength against the 270s, 310s, 350s, rotations back down. Looking to buy weakness, 230s, 200s, 160s down to the 120s for rotations back up. One level outside the obvious would be the 23,070s and the 420s on the upside. We are pretty much in the middle of this range. So I would just look to fade these edges fairly equally back to looking for rotations back to the main. And then let's see if the ES starts leading us higher, we may see the Nasdaq follow suit. So if anything, I would lean towards the long side, just kind of keeping my eye on the ES and see if that's going to be trying to lead us higher. So that's the Nasdaq to get started. And then finally, oil and gold. Those two, oil and gold. Gold had a couple of pretty spectacular days to the upside here. So you can't argue with this move to the upside. Look at that. They started off from the tractor area here around the 3340s. They're up $100 to the upside. So they took out this upper edge, 3380s. They took out the volume edge at 3415s, and they're right up here in almost price discovery. A little bit more to go, but they're not far away from getting into that price discovery territory, and that could be something, Buying gold right now, I'm not sure exactly if it's more like central bank buying. I know China is buying a ton of gold, leaning on that. So there's a real demand for it out there. But the reason I don't think it's necessarily flight to safety or anything like that. I think it's more could be a big part of that BRICS nation, if you remember that. Building up reserves, buying gold, building reserves to attack the US dollar. That is one big reason. I heard that part of the analysis a couple of times, and it could certainly be what's going on there. But gold's trading higher, traded from the long side of the market. No matter the reason, it's trading higher. It could be speculation, could be big institutions buying it, central banks, and so on and so forth. It's still trading higher, so traded from the long side of the market. Look to buy weakness, 3430s. 3420s down to that 3415s. Below 3415s, I'll take off the long bias and go back range bound, looking for a retracement trade. And on the way up, for short setups against the 46s and the 50s, little bit less aggressive on that. We are trading higher, and I would not be surprised if they try to take this higher again. So we'll see. They're still in the move out of the middle, and we should trade it as such. So not super aggressive on the short side, favor the long side at least for now. And then oil, that's kind of going in a sideways pattern. Not much going on oil at all. It's I'm waiting for that to break 64. They've been grinding lower here. If I split these guys out, you can see we have been a slow grind to the downside, right? And it just asking for a little pop to the downside. But as long as the support areas hold and they haven't taken out the 64s, we are still in a spot where they're just testing lower edges. So looking to buy against the 64.80s, 64 even for rotations back up. And 64 comes out, yes, at that point I would be looking for more aggressively for a short trade. And that can happen pretty quick if they knock this down, taking out this low volume area, and then basically we'll be right back here at 61s in no time. So look for that. But I mean, initially we're looking to buy against these two, looking for the failure to take out the lower edges. So that's oil. Starting off on the short side, looking to sell strength, 65.20, 65.60s for rotations back down. And looking to buy against that 64.80s and 64s for rotations back up. Above the 65.60s, let's go back range bound on that. Take off in a short bias. So that's oil and gold. Back to the ES, and so far, as I said, this is very different from Nasdaq. So you remember Nasdaq was right back down here in this lower range. The ES is right back up here in that upper edge. So strong ES overnight, right up here against these upper areas. So if they take out this edge now at 75, we could see a nice move to the upside. If they just probe it and fail, and take out that 63.60 afterwards, I would be a little bit more aggressive on the short side and see how far they can run it on the downside. But it's initially, if you see weakness, I'm looking to buy it against the 60s and the 50s. Rotations back up. But if you see that dynamic when they start taking out this edge to start with and then fail after the end, and after failing it, take out that 60 edge and that order, yeah, then I would be more aggressive trying to get short at the 60s, looking for a potential move lower, see if they can test these lower edges. It's all about if that edge is going to hold and how they're testing it. So that's what we're looking for this morning. And if they start grinding this higher, definitely have a shot at the moving Nasdaq with it. But Nasdaq got a few big items coming up here after the close, so that would be Google and Tesla earnings. All right. So that's how we get started. So starting off with the bias to the upside on the ES, looking still for failure against this 75 edge. The Nasdaq pretty much range bound right now to get started. They're trading in the middle of that range, and I would just fade those edges equally on the Nasdaq. Alrighty, guys, we'll wrap it there. So that's a good starting point. Let's see what happens. All right, so good trading, and I'll see you back at 11:30 for the next update. All right, guys, later.